A very good afternoon to everyone. Let us begin with choosing the right strategy. The right strategy of every mutual fund which is aligned to be selected. Like some of the investors should select the mutual funds aligned with their own interests. If I go for evaluation of this category, if you see based on the choosing the right strategy, you can consider a lot of investors who can select mutual fund based on their experience. So mutual funds are categorized based on the mutual fund objectives, or mutual funds are categorized based on the investment objective or multiple asset classes. So based on the evaluation of a fund category, I can talk about understanding investment objective before selecting a mutual fund. So everyone should know that before selecting the mutual fund, you should understand your own objectives or investment objectives of exactly why investment is made on particular investment plan. So if you see this slide, you will come to know that about investors should select mutual funds aligns with their like risk tolerance, time horizon or income needs. Now coming for the time horizon, that's a time frame or what we call as an investment horizon. So short-term goal to lean with their capital preservation, long-term goal might be prioritizing when it's come for growth, or determine your time frame for investing. So it might be short term or medium term or the long term. So the time horizon really required for the capital preservation. At the same time, it will reach the goal. It might be long term goal, might be prioritized for the future growth. Take example, you invest for today and expect tomorrow, and you never expect the return in the short movement, but you expect for the long movement. That itself talks about long-term goal with the growth. So then you have a risk tolerance. A conservative investor prefer income and preservation. So exactly it is said like risk tolerance. One more word like assess your comfort level with the market volatility, like exactly what you were expected and how this market are comfortable with the investment pattern. So assess your comfort level with the market volatility or changes. Then coming to the third one, we have a income needs, what we call financial goal. Retirees often seek income-focused funds, all while youngster investors prioritize the growth. So when I talk about the income need or financial goal, you identify your goals such as wealth creation, income generation, or capital preservation. So you prioritize your growth based on identification of your own goal based on the future wealth creation or income categories. So choosing the right strategy, have investor gone for choosing the right strategy based on what strategy they have been chosen this market. All these are based on the fundamental strategy. So there are the investors choose the right strategy based on the fundamental objective what is to be required to think about today and for the future. So you have a three important mutual fund strategy where you think before investing. That's why we say before selecting of every mutual fund or any mutual fund, you should define yourself of your objectives, exactly what type of understanding with the investment is required. So this is the intention, this is the purpose, how objectives have been met. Then next, when we go for the different classification, mutual fund often detail objective and strategy based on the perspectives or providing the transparency for investors. So it already says like choosing the right strategy while selecting the mutual fund might be very crucial to achieve your investment goal. So every individual, every investor who like to invest in the uh, different avenues or different source of revenue, one of the objectives they should match with their crucial achieving of their investment goal. So whether you are on the short term, medium term or long term objectives, that is classified. Then you should understand your investment objective too. You should understand your objective based on the multiple calculation where it is classified to evaluate fund categories. So I'll go for the next slide. You'll come to know that there are different types of a building a portfolio, and how to build your portfolio or how to build your mutual fund portfolio. I shared one of the link here. So based on the YouTube link, you just need to go through for this fund portfolio, and one of the tasks will be assigned to you. So just identify yourself what is your objective based on the short term, medium term, the long term, and whether that objectives are met before or now or for the later stage, how it can be considered. So you should think about investment objective before prioritizing yourself that how to buy. So all will go for this link. The next slide talks about one fund, how your fund is accumulated, and how your funds are will see the growth in future days. Like one job, always expectation is salary, and when you classify this job, they classify that present salary and the future salary. In the present salary, you classify again about one side with the today's expenses. Now, when I go forward explaining about why this investment plan is required and the investment objectives should classified, you should know that every objective of this investment plan is to be recognized in advance. So one job exclusively, everyone go through for applying of a job based on the performance, and performance always is evaluated based on your expectation from the salary. So many people get salary, not as many, 99% of people just work for salary purpose. 1% might be under social service, so they don't have any kind of a need of money. But when it comes for job is classified as salary, and this salary further they just go for division between the investment and the objectives of the meeting of expenses. So you might be classifying one is form of salary, one is form of investment. Now this salary further is classified investment. This salary further classified into expenses. One side you'll see today's expenses, another side you will go through for what type of investment can be set. So when I see the salary, today's salary, it also classified today's expenses like food, accommodation, paying of bill, fees, entertainment, transportation, emergency, or any miscellaneous. See, one salary when it is expected, it might be now or then, but when you expect, you focus or you predict based on tendency of your expenses. Like this expenses, what you're seeing right now, these expenses very much is a day-to-day requirement, including food, accommodation, bill, fees, entertainment, and the transportation or any kind of emergency funds which is needed. And this is not a part of the savings. All these expenses are not part of savings, but they are routine day to day to meet your requirement. These expenses has to be incurred. So that is called today's expenses. But another side, whatever money you keep side in form of investment, another side in form of investment, whatever money has been kept aside, which will accumulate asset. Now accumulation of asset, it is not easy under short term period or in form of medium term. Accumulated assets only can be realization after certain year, especially the investment made in small amount. I said people can join with the mutual fund of 500 rupees, normal fees of 500 rupees, and they can pay installment whatever lump sum money they have, and you can see the benefit paying of small amount, paying of large amount at lump sum, and expecting return in the name of accumulated asset for future days. So the compound rate of interest what you get, it is much more than what you pay for the small amount of investment. So here investment which always invested in some kind of buying of any kind of assets which will accumulate the find of assets in form of investment, and further this accumulated assets are classified into you think about your retirement plan, because out of expenses you can't think about retirement plan, but future investment which leads to retirement plan, your child future, home purchase, car purchase, from there any kind of foreseen major extra expenses in the future which might be salary income along with it cannot be managed then. All these are to be very much calculative, and investment people do based kind of a sensitiveness about your investment plan. So you just go for today's expenses and thinking about future expenses what might increase. And if you see this slide, Between today's expenses and future expenses, you can see their inflation. The way inflation has to be calculated between today's expenses and thinking about the future expenses, and today's price and the future price, the between the increased price or increased expenses at a time, it is always set as an inflation rate. So that's why in your salary always BA is always high, HRA remains same, or sometimes HRA might go up, but DA will be increased, basic remains same, but DA always to meet with the inflation rate. So here expenses is calculated based on the today's expenses, expense calculated based on the future expenses, and further you divide increase at the time of inflation. So today's price will be totally different for future. So future expense like food, accommodation, again bill, fee, entertainment, transportation, same based on the inflation rate. The expenses today's and future remain same, but the prices of same commodity might go up. So you should plan in such a way, investing based on your investment objective, fulfilling your dreams based on your investment pattern, meeting all type of objectives based on different plan. So you classify salary, investment, asset, how it is multiplied, and how this asset accumulate called as an accumulated investment asset in future date, and how this will help you in future to come out from all this kind of a unpredicted future expenses. So I said that inflation is required, and along with inflation your salary might go up, but you should have one tendency of keeping a side or part of the salary in form of investment plan. So this is very much clear. Like one job, it has a multiple role to play. When it's come for job, a salary is the base, salary is the key, and one salary in form of monetary, in form of incentive, in form of commission, in form of remuneration, and the same form is invested wherever you require to meet your objective, and what is left out you go for investment. So normally people invest which is left out, if they are willing to invest, they invest. Otherwise the tendency will tell them about, they might think about uncertainty of the future, so money are being not invested. So this is a basic example about one salary is divided into what form, and all these are today's expenses, future expenses, and planning for tomorrow in form of retirement plan, child future plan, home purchase plan, or car purchase plan. So you just go for accumulated of money. Accumulated money will always give a good benefit rather than spending EMI or paying installment every month in form of paying high rate of interest. So even if you want to construct a house, you should have a cash in hand instead of going for entirely credit or bank loan. So when you have a cash in hand, it will save somewhat the extra expense in the name of interest. So this is how you need to plan. In case of any type of investment, what investment you do today with the lump sum amount and expectation in the future, and investment made today with the small amount and expected in the future, there's a lot of difference. Why? Because inflation is a fixed expenses which is going to be attached to your salary. Then the next topic you're going to talk about risk return characteristics of different mutual fund category. Risk and return characteristics of different mutual fund categories. Here mutual fund vary widely in their risk and return potential, and this mutual fund vary widely risk and return potential depending on the types of security they invest in, or the investment make in the form of objectives. So here an overview of the common mutual fund category and the associated risk, the return profile. It is classified into such a way that you should go through for different category of different mutual fund. As an example here, the equity fund, in form of equity fund, how this equity fund is beneficial. Now if I go for evaluating the fund category, mutual fund are categorized based on their investment objective and asset classes. What meaning explain. So equity fund is one of the category of evaluating fund, like investing in stock. suitable for the long-term growth. So simple. Investment in stock is very much suitable. Why? Because that will yield more and more income in the long term. It is very much suitable for long term growth. So everyone should know that equity cannot be bought for selling at the short option, short period, but you should go through for future with the long term growth. So investment, you have a high risk equity fund or high risk, high potential in the long term growth, that is the return. Then there are different characteristics of this equity fund, like invest primarily in stocks, making them more volatile because it depends on the market. Then return depend on the market performance, type of stocks. So one of the character talks about the return. Return depends on the market performance and types of stocks. So might be the large capital, mid cap, or the small cap, or the international level. So the fund which has been rated and the return which is expected, that depend on the market performance and the type of stocks what you are going to hold, and hold for how long. Then you have suitable for long-term investor with the high risk tolerance. Some of the investment in form of investor would like to invest in the long-term fund where higher risk tolerance also there, but it is suitable only for the long return or long-term investors. So long-term investment is totally different pattern from the short-term investment plan. So risk and potential of return is very high when it's come for short term, but when it's come for long term, return can be expected to high and risk can be somewhat manageable. Then you have an example for equity fund, like large cap funds are lower risk than small, mid cap funds or stable return. So the example they divided, large capital risk is lower than the small, and or mid cap funds are stable return always. Like you want to waiting period for 5 years, or waiting period for 10 years, 15 years, your investment plan for many multiple year. Based on this classification, investment pattern has certain objectives. So that objective can be met by fulfilling all the classifications. So this is how it goes, an investment to investment from one plan to another plan. And it go for centralization investment plan based with the different SIP, systematic investment plan, where the market volatility has to be checked into, whether it is high, low, whether it is a suitable market, the potential of the market are very clear, whether you can invest in the large cap, mid cap, small cap, what type of a investment return you expect, what type of a large fund has to be diversified on the risk return profile. All these are one of the character of the mutual fund category and equity fund. And one more example, like sector funds, I said sector funds are sector kind of a industries, like even investment in form of infrastructure, or any kind of a pharma related companies, or any kind of a cement company, any kind of metal industries, or based on the volatility in market price, you can expect the return. So when there is huge demand for infrastructure, I can tell you investment in form of a steel, investment of manufacturing component where you can invest in. So sectoral fund has a highly volatile as they focus on specific industries, and this is how it will help you to know about how mutual funds are largely or likely to be adjusted in form of investment pattern. And they just identify which are to be more focused, which are to be less focused, and based on this risk return factor, where exactly can be invested. Then one of the example, it has been highlighted, international or global funds. When we talk about international global fund, we talked about today, it's about the crypto, right? A cryptocurrency, investment in form of crypto, or any other mean. Recently might be seen the Bitcoin, and how this price has gone at international level, or many other form of derivative market, where different electronic component currency has been circulated, and it is on huge buzz now, and people make money in form of different various variety of investments can be made. So here international global fund exposed in form of currency risk or geopolitical factors. So currency from country to country with the level of the price of the rupee value, and geopolitical geographical boundary area, how it is going to help. So first is an equity fund and a risk return character and different mutual fund character, and everyone should know about the potential or depending on the securities that the investor invest in. So this is number one. So remaining, we'll see in next class. Thank you all.